Asia markets are mostly higher as the region prepares for White House tariffs on key trading partners. Sweden's food prices soar for the first time in years following economic strain and currency woes. And we explore the crypto industry amid global fraud scandals and billion-dollar betrayals. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Asia's markets are walking on a tightrope, balancing political shifts, investor nerves and global uncertainty. But it's not just stocks feeling the pressure. Commodities and currencies are also swaying with every new headline, from oil prices reacting to peace talk hopes to gold and the dollar dancing around tariff fears. So is this cautious movement a sign of resilience or just the calm before the next storm? Asian markets opened the week with cautious optimism as most indices edged higher, even as President Trump's 2nd April reciprocal tariff deadline casts its shadow. Japan's Nikkei 225 climbed 0.14% and Hong Kong's Seng index added 0.1%, but investors remain cautious of Washington's next move. South Korea's Kosdaq outperformed, rising by 0.74% following political relief at home. Meanwhile, the Kospi notched up 0.13% after the Constitutional Court struck down the impeachment of Prime Minister Han Duck-soo. Investor confidence in smaller stocks bounced back, suggesting political stability still plays a powerful role in market sentiment. Australia's S&P ASX 200 slipped 0.07%. Mainland China's CSI 300 remained flat at 0.19%, reflecting deeper market uncertainty. Premier Li Qiang warned of rising instability and urged countries to open their markets, signalling Beijing's awareness of fragile trade dynamics and the importance of cooperation in a volatile economic climate. Brent crude fell to just below $72 as hopes rose for a Russia-Ukraine peace deal and increased Russian supply. The US dollar hovered near a 3-week high, with the index steady at 104.15 ahead of Trump's next tariff move. Meanwhile, gold slipped to $3,010 per ounce as optimism grew following renewed diplomatic peace talks. Let's get more on this now with Lee Chingan in Kuala Lumpur. She's a financial market strategist at XNES. Good to have you back with us, Lee. Now, how are investors balancing political shifts with global trade uncertainty at the moment?
Yeah, thank you so much for having me. Right, so as you mentioned, right, investors are treading carefully right now. On one hand, we have the political shifts, especially in major economies. It's creating a lot of uncertainty. I think right now the focus is more on the markets grappling with Trump's tariffs, right, and also the announcement of reciprocal tariffs, which will take place on 2nd of April. So I think that also added complexity in terms of global trade flows, as well as market sentiment, right? As markets are worried about retaliatory measures from US trade partners, and that can in turn drive inflation and also disrupt global trade. So I think in response, we are also seeing rotation out of US stock with the recent sell-off, right? Especially because of lofty valuations. Investors might be looking for bargains in other markets, for example, in Asia or even emerging markets, with the slight notch that we're seeing in some of these Asian markets, or even safe haven assets like gold. So we're also seeing gold rose to a fresh record high right before pairing recent gains. So I think this is one way that investors are trying to hedge or trying to address this geopolitical risk in place right now.
And should we expect more volatility ahead of Trump's tariff deadline next week?
Yeah, absolutely. I think that as we approach the Trump's tariff deadline for reciprocal tariffs, we are likely to see more volatility ahead, right? Especially in global trade-sensitive sectors. I think markets are becoming more sensitive to trade developments. For example, if Trump's tariffs, as Trump's tariffs are still on the table, right, uncertainty is also in market sentiment, right? So the risk aversion that we're seeing, it's also trying to tempering any upward momentum on Chinese stocks. We're seeing the recent Chinese stocks, the rally actually tempered, right? Because it was following that optimism surrounding DeepSeek. So I think investors are right now more on the sidelines, waiting for developments around the Trump's tariffs.
Right, and looking at China in particular, what does the performance in markets really tell us about global investor mood?
Yeah, I think that China's flat performance, like you mentioned, right, it's a clear signal that investors are still cautious, especially regarding the growth trajectory. The Chinese market itself, they have been under pressure, right, for the past few years due to a combination of factors, mainly the property crisis, as well as a lack of domestic demand and lack of consumer confidence as well. So I think in terms of these are still structural challenges in place, right? So deflation, it's also a problem that is still persisting in the Chinese economy. So this coupled with this risk aversion that we're currently seeing surrounding the Trump trade tariffs, it could mean that global investors are waiting, or rather they are reacting to the more certainty, right, once these tariffs or more details on these tariffs are confirmed.
All right, Lee Shingan in Kuala Lumpur, we will have to leave it there. Thank you very much for being with us.
Thank you for having me.
Now, rising food prices in Sweden are making it tougher to shop for food favourites, sparking boycotts of major supermarket chains. So what's driving this inflation? Emre Boz investigates.
The cost of food in Sweden keeps rising, and so too does people's frustration.
Every day the prices go up. By maybe 5 krona for a carton of milk. The other day I was going to buy nuts and it was very shocking. 350 for ordinary nuts, which would have been 100 per kilo.
Reports show grocery prices in January rose nearly 20% over 2 years. The government now forecasts inflation for 2025 at 2.5%, higher than expected. This surge has fueled an online campaign to boycott dominant retailers like Willys and ICA. Some shoppers are going further, travelling long distances for cheaper options.
They do a lot of discounts here. Discount, discount, discount. And I travel from Varberg to do my shopping at Prisma. The meat is not that expensive here either. Prisma is a good store. It helps people. Coop and Ica are too expensive. You cannot buy from these shops all the time.
But are supermarkets to blame? These rising costs mostly stem from Sweden's reliance on food imports, which make up 50% of its supply, leaving the economy vulnerable to global market swings. A weak Swedish krona is also driving up prices. The IMF estimates the krona was undervalued between 10 to 20% in 2024, primarily due to a strong US dollar. Meanwhile, the economy is not doing well. Sweden's GDP growth has been sluggish, dipping into negative territory twice in 2 years. Though it rose to 0.8% in the fourth quarter of last year, growth is still below 1%. The central bank has stayed dovish, maintaining its rate-cutting trend, lowering rates to 2.25% in January. This keeps borrowing costs low to encourage spending, but with the economy lagging and prices soaring, Swedish shoppers might just have to tighten their belts. Emre Boz, TRT World.
For more on this, we're joined by Gunilla von Hall in Geneva. She's a foreign correspondent at the Svenska Dagbladet newspaper. Good to have you with us, Gunilla. Now, to what extent is Sweden's food inflation a reflection of wider inflationary trends across Europe?
It is partly true. There is an high inflation rate in many European countries. But in Sweden, it is more pronounced. The inflation rate is more extreme, one might say, in food prices especially, because we're so dependent on food imports. Like it was said earlier, in the 1990s, I think we produced much more food on our own in Sweden, and today we are dependent to 50% on food imports, and the Swedish krona is so weak. And then to import so much from abroad, then the prices goes up very high for the consumers. That is one explanation. Other explanations is, or some people say that the big retail chains that we have in Sweden, there are 5, 6 big retail chains, that they have too much of a control of the market, so they can spike up the prices, and we do not have enough competition to keep prices down.
Right, and as you mentioned, Sweden imports most of its food. So how does this reliance compare to others across the continent, and what vulnerabilities does that create in a volatile global market?
Well, as I said, I think in the early 90s, we produced 75% of our own food in Sweden. Now it is 50%, and that is very high for Europe. Sweden is also a country where you cannot produce vegetables and fruit and so forth a big time of the year like in Southern Europe. So we are very dependent. The food import in Sweden is higher than many EU countries. And for example, Belgium, Spain, Denmark, France, they have lower food import dependency than Sweden. So they can be much more self-sufficient than we can. Perhaps some people say with climate change, we will have a warmer climate and we could potentially produce more food on our own. But then you have to think of, we have to import seeds, we have fuel, we have other infrastructure that we have to import. And that is still going to be expensive because the krona is weak.
Right, and can the undervaluation of the Swedish krona be attributed solely to the strength of the dollar, or are there deeper structural issues within the Swedish or European economies?
Yeah, I think it's not only the dollar, it's only the Swedish economy is really stagnating since several years now. And there is not a big interest, one can say, in the Swedish krona by foreign investors. So what do you do? How do you increase this interest? The Swedish krona is not so interesting. Some people in Sweden regret that we did not join the euro, and there are more and more people saying that we should. Is it too late? Could we do that now? Could we somehow save the situation? Because the Swedish krona is in free fall, a lot of people feel. And yes, it helps our export. It is, quite cheap to import from Sweden. But the import is so expensive and the prices go up. And this creates a problem also for the Riksbank and for the central bank, because if prices go up, then inflation goes up, and then the interest rate must go up. And if the interest rate goes up, then the economic growth will not take off as we like and as we need.
Indeed. Gunilla von Hall in Geneva. We'll have to leave it there. Thank you very much for joining us.
Thank you.
Now, a quick look at some of the other top business stories from around the world. Venezuela has cut public sector work to 3.5 days a week. Offices will now only open in the mornings, and people are urged to save energy. The government says the crisis is caused by drought, which has lowered water levels at dams. Most of Venezuela's electricity comes from hydro plants. UK Finance Minister Rachel Reeves says the government will cut its running costs by 15% over the next 4 years. That would save nearly $3 billion a year. She says the goal is to shift workers from office roles to frontline services like schools and hospitals. Australian fibre cement maker James Hardie Industries has agreed to buy US decking manufacturer AZEK for $8.7 billion. The agreement marks the latest big bet on US homeowners' spending power as mortgage rates begin to fall. The merger will create a company with combined earnings of $1.8 billion and revenues of $6 billion. And US DNA testing company 23andMe has filed for bankruptcy and announced the resignation of its chief executive. The move is the latest chapter in the saga of the company that was valued at $3.5 billion when it went public in 2021. 23andMe says it plans to continue operating throughout the sales process. The crypto market promised decentralization, trust and freedom, but that image is fading fast. While billions pour in and tech evolves, bad actors are exploiting loopholes faster than laws can catch up. With arrests and scandals mounting, can crypto still claim to be the future of finance? Let's take a look at some of the biggest events shaking the industry. Alexei Andreevny, CEO of crypto firm Kospi, just pleaded guilty in a major US fraud case. From 2018 to 2024, he was running what's known as wash trading, basically fake trades to boost the value of obscure tokens. Prosecutors say the firm made tens of millions doing this now. Now, Andreevny faces up to 2 years in prison and a $23 million forfeit. And remember Sam Bankman-Fried? He was once seen as the golden boy of crypto. But in 2022, his company FTX collapsed, taking billions in customer funds with it. He was sentenced to 25 years for fraud after it came out that he'd misused money and made shady deals behind the scenes. Investors lost over $11 billion and a lot of trust in the system. And then there's Celsius Network. It started as a crypto lending platform, but by 2023, its founder, Alex Mashinsky, was under arrest. He misled customers about the safety of their money, and now he's pleaded guilty too. He's agreed to give up $48 million and could face up to 30 years behind bars. And finally, some of the most extreme examples, Faruk Fatih Özer, founder of Kosdaq, got a jaw-dropping sentence of 11,196 years in prison for defrauding investors of $2 billion. Meanwhile, Do Kwon, the man behind Terraform Labs, is fighting extradition. His failed stablecoin project reportedly wiped $40 billion in investor funds. Let's unpack this now with Mark Humphrey-Jenner, Associate Professor of Finance at the UNSW Business School. Good to have you back with us, Mark. Now, we've seen some big names in crypto taken down in recent years. Do you think these arrests are finally a turning point for accountability in the industry?
Well, firstly, thanks for having me. And the arrests certainly will help to shore up some confidence. And some of these arrests relate to things that would ordinarily be illegal in normal or standard financial markets. So, for example, wash trading, well, that would be straight up market manipulation with ordinary financial instruments. You do that on stocks, and it would be illegal as market manipulation. Similarly, in the case of FTX, if they took money in from customers for one reason, then they used it for another reason, well, that is fraudulent because you're transforming the risk profile of the money you've taken in. Similarly with the allegations against myriad other exchanges. And just recently, the US has also sought via India the arrest of another crypto entrepreneur who reportedly had been engaging in slightly illegal behavior, who is running Garantex, for example, and that's going to go through to trial. So we're seeing a lot of these arrests. It certainly is going to clean up some of the behavior that people are more concerned about. But many of these exchanges are really outside the jurisdiction of, for example, the United States, meaning it's actually rather difficult to seek penalties. But it certainly does show us the authorities are taking the matter seriously, even if there's going to be a lot of them that slip through the cracks.
And how did these companies manage to operate for so many years without getting caught? I mean, is regulation still that far behind?
Well, say we're looking at FTX. So FTX is probably the most high-profile one. In reality, it could operate for so long, largely because it effectively was looking profitable. But then ultimately, when things start to go haywire, that's when people start to notice. For example, no one would have noticed if Alameda, which was the linked hedge fund, so to speak, weren't facing financial difficulties. If it were going along okay and actually being profitable, people probably wouldn't have even noticed that the fraud was going on in the background. So it often really comes to the fore when the exchanges are struggling or potentially when people's deposits or currency are frozen within the account. And that's often where it materializes. But of course, sometimes the authorities do just happen to check on things. So notice unusual movements, notice what looks like a pump and dump, which could potentially enliven the ire of authorities, or notice things like wash trading, which might really enliven their focus on specific changes or exchanges, when they notice that with specific cryptos.
And with so much money lost, what would it take for everyday investors to feel safe putting money back into crypto?
It's a very difficult one because cryptocurrency has the two issues it's trying to balance. On the one hand, cryptocurrency is seen as decentralized and is trying to get people, or enable people to avoid potentially draconian governments that they fear are going to expropriate their wealth. So it's trying to do that. Now, for that goal, you need it to be somewhat decentralized. You need government intervention to be relatively low. And that is a core constituent for cryptocurrency. On the other hand, many traders do want a degree of minimal market protection. That is, they want to ensure that market manipulation isn't there, that they are actually, well, owning the assets they think they are owning, that they aren't being expropriated, and that to some extent does require some government oversight, or at least a very high degree of trust in that exchange, which is very difficult to establish and can be erased through just one act of wrongdoing. And you're trying to balance these two things, which makes it very difficult for cryptocurrency. Now, certainly in the United States, they're trying to tread that fine path by perhaps removing some of the more onerous regulations, trying to have a light touch approach to regulation, while also flagging they might have a crypto reserve, so to speak, which isn't really a reserve, but a stockpile. So they're trying to thread that needle, but it is very, very difficult to do.
Right, and do you think the future of crypto depends more on cleaning up its image first of innovators?
The future of crypto probably is going to be best served in markets, for example, like Singapore, Hong Kong, Dubai, areas like that, where there's confidence that the government isn't going to expropriate individuals' assets. And when you've got confidence in the government, what that enables is the government to go in and have that light touch regulation. So it enables the government to go in and say, we're going to try to get rid of market manipulation. We're going to try to get rid of outright fraud, try to get rid of people's assets being stolen, that type of thing, the types of things that no one really wants. But also when it's a country that is not seen as a threat, where the regime in place is not seen as potentially going to take away the assets for arbitrary reasons, people have confidence in the government. So it really rests on those two things, confidence in government and also confidence in the exchange.
All right, Mark, Humphrey, Jenna, thank you very much for your analysis.
Thanks for having me. Great being with you again.
Now, across the world, USAID cuts made by Donald Trump's administration have forced aid organizations to make difficult decisions or stop their operations altogether. In crisis-hit Lebanon, vulnerable people see the cuts as an example of another blind eye to their struggles. Priyanka Navani reports.
Lebanon's rural northern region of Akkad is one of the poorest areas of the country. More than 50% of the population is unemployed, and the porous border with Syria has led many refugees here. Life isn't easy, so when USAID intervened to provide electricity in a country where the state only provides a few hours, it made all the difference.
We used to suffer a lot, and the electricity was always off. The situation was so hard. Sometimes we went 1 or 2 weeks, sometimes a month without electricity. There were problems with the electricity meter and transformer. There were a lot of problems. When the USAID project came, everything came.
But now, USAID, which helped the U.S. earn its place as the biggest humanitarian donor in the world, is no more. Dismantled by the Trump administration in the early days of his second term, more than 80% of projects worldwide were canceled. The surviving ones now managed under the Department of State. Life-saving and life-changing projects ground to a halt.
U.S. Agency for International Development gave us an electricity station, and we thank them for that. But we were waiting for network maintenance. But now, because they're not providing money anymore, we feel like we hit a huge wall.
It's not just Kharbat Daoud feeling the cuts. The some $1 billion USAID has spent in Lebanon over the years were key to the education, health, and environment sectors, among many others. The organization generated millions for the struggling Lebanese economy, including by employing thousands, directly and indirectly.
And at the time where the USAID was operational in Lebanon, it was helping, financing many NGOs, plus some of the public projects of the government. The loss of such financial assistance by the USAID will certainly have a negative impact on the Lebanese social issues and also on the Lebanese economic growth.
Some organizations that are supported by USAID are hopeful that their funding will eventually be restored. Others are hesitant to speak out at all, out of fear that speaking out against an American administration that has already retaliated against criticism could have lasting consequences. Lasting consequences that would leave already vulnerable populations defenseless. Priyanka Navani, TRT World, Lebanon.
Well, that's all your business news for now. Thanks for watching.